Hello, I'm Jeffrey Ham, equity analyst for Briefing.com. Today is Thursday, December 18th. Stocks chopped along in a relatively narrow range until economic bellwether General Electric had its credit outlook lowered late in the session. The announcement induced selling pressure, which took the stock market to a loss of 3% before it finished with a loss of 2.1%. Shares of GE fell to a multi-week low after Standard & Poor's lowered the company's credit outlook to negative from stable, which is not the same as an actual downgrade. GE is one of only a handful of companies to carry a coveted AAA rating. However, Standard & Poor's did indicate there is a 1 in 3 possibility of a downgrade within the next 2 years. ExxonMobil, which also carries a AAA credit rating, was a laggard too. Exxon stock dropped markedly as crude futures contracts plunged amid ongoing demand concerns. Integrated oil companies finished the session down nearly 6%, while oil and gas drillers dropped more than 11%. Though OPEC announced yesterday production cuts intended to bolster prices by realigning supply with demand, oil prices have gone on the slide this week. January crude fell as much as 10.2% to take out a new multi-year low of around $36 per barrel before settling at $36.74 per barrel. Contracts for January delivery expire after tomorrow's close. Upon the expiration of those contracts, February will become the front month. February crude closed at $42.06 per barrel, down 5.7%. Materials were also trading with weakness, finishing about 4% lower. Freeport-McMoRan dropped more than 10%. Its loss followed weakness in metals. February gold slipped $7.90 to settle in at $860.60 per ounce, while March silver shed 30 cents to settle in at $11.12 per ounce. Copper was also down, with March contracts slipping to about $1.30 per ounce. Weakness in commodities was exacerbated by a resurgent dollar. The US dollar was able to snap its recent losing streak by climbing 0.7% this session. It is still down 5% for the week, though, as currency traders assess the country's extraordinary spending plans and weak economic conditions. Though a stronger dollar bodes well for U.S. consumers, it can dampen earnings prospects for multinational companies, depending on foreign markets for growth. Nike and FedEx, both global companies, posted better than expected quarterly earnings results ahead of the opening bell. Their results have been helped by international markets, but economic headwinds will challenge their performance in the future. As such, President-elect Obama is reportedly planning an $850 billion economic stimulus plan that would be phased in over the next couple of years. The current White House administration is reportedly planning to provide automakers with aid before December 25th. Treasury Secretary Paulson will take the lead in the planning, but details for the plan remain unknown. Separate reports indicated General Motors and Chrysler reopened merger talks, but GM later denied the claim. In economic news, weekly initial jobless claims and continuing claims were down a bit from the prior week and essentially in line with expectations. The claims numbers can be considered relatively positive since they didn't surpass the estimated levels, which has been the case in previous weeks. But the decrease may suggest some workers have exhausted their jobless benefits since companies continue laying off workers. I'm Jeffrey Ham for Briefing.com, and thanks for listening.